Back in, it's time to talk about your money on Money Tuesday. And due to COVID-19, the economic damage it inflicted, many lenders have created now deferment and forbearance relief programs to help you with your loans. Now, this was welcome relief, obviously, for the unemployed and those suffering from severe reductions in their income. But if you're taking part in either of those programs, you should understand what is expected and also some of the pros and cons of each. Marshall Clay is with the Welch Group. He joins us this morning on FaceTime to help you guide through some of that. Good to see you this morning.
Good morning, Mike. How are you?
Doing okay. Cannot complain, but a lot of folks could complain because they're in tough financial situations. And, you know, it's good that these lenders have provided some of these options to them. But first, let's talk about what folks need to know about deferment and forbearance.
Yeah, so a couple of major differences. I mean, these terms are typically used interchangeably, and I think there's a little bit of confusion out there. So, you know, when you're talking about deferment, a couple of things. One, you get to defer the actual principal payments on any loans that you have. You can actually defer interest. And then also the payments can be made typically over a period of time. Now, the big difference between forbearance is you do get to defer the principal, but the interest continues to accrue. That's a big distinction. And then also typically you're having to pay that amount back in full at the end of the forbearance period. So two big differences. I would say deferment's probably preferable if you have a choice, but there's some certain major differences there.
And talk a little bit more about what happens on the back end of that, because some folks who aren't familiar with the terms make it a little bit of a sticker shock, right?
Exactly. And so that's why it's important for any of your viewers that are participating in these programs or thinking about participating in these programs. They need to get with their specific lender because it's different depending on who the lender is. So make sure that you understand really first and foremost your responsibilities on the back end. Are you going to have to repay the amount in full? Are they going to give you some time to sort of pay that back? Because that could really influence your behavior in the short term, right? I mean, you don't want to get stuck with having a massive payment on the back end that you can't pay that's going to ultimately affect your credit score and things of that nature.
I know we only got about 50 seconds left. We mentioned some of the pros and cons of each, but just another recommendation as folks maybe try to discuss this with their family in terms of a financial solution.
Yeah, I would really just recommend people take their time and explore all of their options before they go or before they take advantage of any of these programs. I mean, these are great programs. They've offered, tremendous relief to people. But I ran across somebody, recently who participated in the forbearance program, and they realized, when they were trying to refinance their home and take advantage of historically low rates, which was going to save them thousands of dollars over the life of the loan, that their particular lender was requiring them to pay back the forbearance in full before they could take advantage of those opportunities. So just understand that these programs, it's not all a free lunch. So if you have other options to sort of bridge that income gap between, when you get laid off or you have a reduction in income, when things get back to normal, that's worth doing.
All right, good information. Marshall Clay with the Welch Group. Appreciate it.
All right, thanks, Mike.